Hello friends, this is Raj Sastry from Raj Option Trading. Hope you're all having a good weekend. Let's take a look at top fintech stocks and see what stocks we can buy. So with that, let's jump in here. So what I've done is I've sorted these companies by market capitalization. Stock at the top has got highest market capitalization. Look, we got Visa at the top. Visa is even bigger than JP Morgan. I would not have thought about it if I did not look at this one here. Look, Visa has got a $433 billion market cap, whereas JP Morgan is 396. And then we got here the insider and institutions, what they're doing. Look, when the insiders are buying, that's a good sign. But we got some scenarios where insiders selling, like Intuit here, and we got AXP, American Express, and few more like BX, ADP, and so on and so forth. When the insiders are selling, that's typically not a great idea. Stock might come down a little bit, but sometimes insiders have to sell for many purposes, like personal reasons and so on and so forth. Not a big red flag. But when both insiders as well as institutions sell heavily, that's a red flag here. So with that, then we got here the sales and sales growth. Very important to look at companies with nice sales growth, especially if you're a growth investor. Look, we got Visa at the top here, even up here, with the sales of 25 billion dollars, they're still growing at 24% clip. That's a great clip here. And then you got Mastercard, $18 billion in sales, and they're growing by 27%. That's also a great sign here. So if you're a growth investor, focus on the quarter over quarter sales growth. And also, if you have year over year sales growth, you could look at that one too. So with that, look, JP Morgan is not a growth company. The 0% growth quarter over quarter. Whereas we got Visa and Mastercard, Intuit, they're all growing nicely. They are the growth companies. Then you got gross margin and net margin. You want to make sure companies not only grow the revenue, top line revenue, also they keep some money for themselves with nice net margin. I love companies with nice gross margin, maybe about 30% or so, and more importantly, a nice net margin. Look, we got many companies here with nice net margin here. When the net margin is positive and there is a growth, like sales growth here, that's a good winning position to be in. So companies like Visa, Mastercard fit the bill here. They're growing and they also have solid net margin. Whereas JP Morgan, it's not growing, but it's got a nice net margin. It's a value type company here. And then I look at financial positioning, debt to equity ratio and quick ratio. I want debt to equity ratio to be below 1 and quick ratio to be above 1. So I've highlighted few stocks in red here. They got a little more financial leverage. That's why it's highlighted in red. But financial companies tend to take a little more financial leverage because they know what they're doing. And then we got RSI or relative strength index. I want this to be lower. Lower RSI indicates stock is oversold. Higher RSI indicates stock is overbought. For example, Visa, it's completely oversold here. RSI is 29, which is the lowest in this list here. Whereas ICE, Intercontinental, which is a capital market company, RSI is 70. I would not buy it up here. Look, stock has gone higher. It's also indicated by a higher RSI. I can tell by looking at the RSI, stock has gone up in last 14 days. That's why RSI is higher. I would not buy that right now. And same story, Thomson Reuters, RSI is 58, as well as Paychex, RSI is 59. I would look for RSI to be at least below 45 before I jump in. Then you got short ratio. You got to be looking at short ratio. The higher the short ratio, about 10%. Look, we got square or block. This might create a short squeeze. It did go up a couple of weeks ago. So you got to be looking at this one, because if the short ratio is high, there is a great chance it can create a short squeeze situation at some time. And then you got performance here 1 day all the way to 5 5 year. The reason I have added all the way to 5 year is because I want to make sure stock is doing well in the long term if the company is in the market for a long term. When there is a long term positive performance and there is a short term pain, you could, if the company is fundamentally sound, that's the time to buy. So you want to make sure long term story is intact and there is some short term pain which is temporary. That's when you buy. Then free cash flow, very important. We want to make sure free cash flow is positive, especially in these times when there is no patience from Wall Street for free cash flow negative companies. Look, we got Goldman Sachs here with the free cash flow negative. You could avoid this one up here because Wall Street does not like such companies at this time here, and go after positive free cash flow companies. And then we got here Altman Z score and Piotrowski F score. I like Altman Z score to be above 1.8. Some companies like AXP got a little bit less score here. But more importantly, I want Piotrowski F score to be above, say, 678 or even 678. Higher the better. Look, we got some names with nice 8 score here. Visa, Mastercard, and we got one more here, which is, let's see here, FISV, which has got nice score here, which is 8. And we got one more here, which is FIS, Fidelity, nice and high score of 8 here. And we got one more, which is Paychecks here, nice score. So I would look at such companies, and Paychecks I would skip right now because it's going higher. I would wait for a pullback here. Then we got to look at compare the stock to their own industry from a profitability, growth, and valuation perspective, and we want the score to be lower. The rank lower is better. For example, Visa checks out here, nice rank from a profitability perspective, 1, and growth rank 1, highest, and valuation is middle of the road. You could look at such companies and go from there. Exact same rank for Mastercard here, it's also a good one. And the next one here, which is Intuit. Intuit even better. Look, it's got even the valuation is 3 here. You could look at that one also. And then you got overall score here. I want the overall score to be better, maybe above 50, higher the better. So with that, few companies have got nice and high score here. You could take a look at such companies here and buy them. Look, we got one of the highest score right here in FIS here. You could take a look at that company and buy the stock slowly and go from there. Higher the better. That way you get a good stock. I also like companies like Mercado Libre, which is a little bit a very volatile company, but at these levels here, stock is dropped off big time here. You could slowly buy some Mercado Libre. It's very volatile stocks, but long term it tends to do very, very well. All right, so that's how I would look at it. Keep watching, even the net margin here. There is no patience from Wall Street for net margin negative companies like SE here. I like company SE because it's net margin negative. Look at the pain point it's going through here, all negative. A great company at a discount here. I would wait for this stock to stabilize before I jump in, especially because there is no patience from Wall Street for net margin negative companies. All right, let's look at a few more here. Look, follow same methodology here. Its market cap is decreasing from top to bottom, and you got insiders and institution action here. Whenever you see both insiders and institutions selling, for example, Upstart here, I would not buy Upstart here. Let it cool off. Look, both insiders as well as institutions selling. It's good to wait. So something similar is going on in other names where it's a high insider selling. You could wait for them to settle down before you jump in and buy them. And then, look at the net margin here. There is no patience from Wall Street for net margin negative companies. Like we got Bill.com, even though it's a good company, look, they're not making it from a net margin perspective. That's the reason stock is dropping off big time here. And we got a few more like UiPath, which is Kathy Wood's favorite company. That's also net margin negative here. That's why stock is coming down big time. So that's why I would focus on net margin positive companies here. Look, we got Affirm here, big time net margin negative 77%. Again, stock is coming down. So you should look at net margin also and go from there. More importantly, you could also look at both debt to equity and quick ratio. If debt to equity ratio is above 1, use some caution here. And quick ratio below 1, use some caution. Financial companies, they know how they work around, but I would look at these also. RSI below 45 is good. I would not buy stocks like JKHY here. Very high RSI of 41. I would pass that one for now. Let it cool down. And then I would look at free cash flow. There is no patience from Wall Street for free cash flow negative companies like the one right here, Bill.com, losing money, free cash flow negative. I would skip those things for now. These companies have worked well a couple of years ago, but right now there is no patience from Wall Street. And then I would look at the benchmark against the industry. From a ranking perspective, lower the better. Look, we got few names here with nice overall rank here. Look, MKTX, one of my favorite stock here. It's a nice rank. You could take a look at such companies. And we got one more here. FNF gets the perfect rank against industry here. 111 and overall 93 overall score here. You could buy this one also. RSI is below 43. That's a good one to buy. It's done 25% in 1 year, 102% in 5 years. Not too bad at all. So then we got a few more here. Look, we got one more BKI, which is one of my favorite here. Stock is struggling in the near term, but look, it's got nice score, nice benchmark against the industry. You could look at such names here. All right, so we got a few more here. Look, we got PAGS, which is a Brazilian company here. Nice overall score of 83 and nice performance against the industry here. Nice rank. You could take a look at this one. It's going through some pain point in the near term. If you're a long-term investor, you could slowly start buying and go from there. All right, let's look at a few more names here and conclude. Look, it's a continuation. Some stocks are, there are a lot of selling going on here with the insiders. That's why stock is not doing well off late. But you could wait for them to stabilize and then go from there. And focus on net margin here. These are a little bit lower market cap companies like BL, Blackline, and Q2. They don't have net margin right now. They're losing money. That's why Wall Street does not have patience. Stock is coming down here. And finally, look at the value, benchmarking against the industry. If you have to buy one or two here, you could look at ENV. But the problem with the ENV is RSI is a little high. You should wait for this to cool off a little bit before you jump in. And then you got MITK. Look, it's a very small price stock here. Has a nice overall score, and even benchmark against the industry is also good. You could buy such stock here. They would do well in the long term. It's also a positive net margin company. So with that, thank you very much. Happy investing and trading. Please, before you jump off here, let's look at a few charts. From a chart perspective, as you see here, look, we got Visa, which is one of my favorite. Right now, stock is tumbling down here. It's a great time to buy some Visa if you're a long-term investor. They will do very well in the long run. Right now, RSI is 29. Tells you stock is completely sold off. Looks like their support level is somewhere around the current price here. It can come down a little bit just below 200, but it will start going higher. That seems to be a good support level by looking at 1 year chart. And then you got Mastercard, same story here. Look, stock is coming down big time here. It could find a support somewhere here around 330 or 325. It's again a good one to buy. Look, RSI is very low here. Tells you stock is completely sold off. It's a profitable company. And then you got Intuit. Intuit is one of my favorite here. Stock is coming down big time here. And even on the balance volume is just kind of stable, as you can see here. You could buy this company as a long-term investor. Look, RSI is very low here. And then you got here BX. BX is a great company. They got a lot of ETFs under their belt. Look, it's a better company here. You could buy this. It's a great long-term stock to buy. I think it's doing relatively better compared to other names here, holding up pretty nicely. All right, so we got a few more here. Mercado Libre, which is one of my favorite here. Look, stock is sliding off late here. Now it's stabilizing, as you can see here. At this time, you could slowly start buying some Mercado Libre. If you're a long-term investor, this will do well. And then got Square or Block, Jack Dorsey's company. Look, stock is coming down big time here, and now it's stabilizing. They paid too much for Afterpay when they acquired it. That's why Wall Street did not like it. Now it's trying to stabilize and go higher. At these levels, it should be okay. And then you got ICE. I would not buy it up here. Look at the stock running higher here after the quarterly earnings. I would wait. It's a good company, but I would wait for it to cool off a little bit. And then you got ADP. You could add Paychecks also to the mix here. These are great companies. Job market is strong. There's a labor shortage. Companies like ADP and Paychecks can do well in this environment. They get the steady income as the job market improves. All right. So with that, thank you very much. Happy investing and trading. Please subscribe.